All right. We are recording. We are back after a spice-forced hiatus from being able to do these, man. We haven't had any time. A ridiculous few days. Bitcoin just going ape on everybody, as usual for these warm-ups. And as I recommend to everybody, when they start out a new day of technical analysis, I do this every day. Highly recommend you do too. Unfortunately, you do kind of need the premium version of TradingView to do this, but it is what it is. Start a new chart. New chart. New day, new chart. Then when you're done examining the day, you can go back, look at your chart from yesterday or the day before or whatever, and you can compare it, see if anything you're eyeing up now lines up with what you were looking at the day before or the days before. So for those of you, this is your first time, this is how we always start it. New chart, we zoom out. Zooming out, so important. We need to recalibrate ourselves every day, every single day. Because yesterday we might have been super bullish. The day before we might have been super bearish. This morning we might be in the middle, blah, blah, blah. And new chart, zoom out, recalibrate. Start from zero, start from neutral. So the yearly, man, there's nothing to see here. Nothing to see here that isn't new, that we haven't been talking about. We have 1, 2, 3 critical levels on the yearly, and we're running out of them. We're almost out of them, man. There's nothing left. We had the clear 13,864 from the 2017-2018 yearly high candle closes and opens. Surpassed that last month. Man, things have been cooking. Above that is the wick high from 2018, sitting at 17.2, 17.1. Accurate number 17,178. That was our target for the end of the year, and well, as you guys know, did not even show resistance. Price blew right through it. Didn't even reject it. Didn't even seem to notice. Rallied all the way up to what, 18.5 last night. Our projection was 17.2 closing the year, and when we made that projection, that seemed like a faraway goal. Seemed not so likely. Now it seems possible that we were too conservative. Looking at the yearly, we have still just 13.8, 17.2, and you know what? This isn't a yearly value. Always put this number on the chart. You have to do this one manually from the yearly. 10,500, just put it on your chart, boom. Doesn't really matter how accurate it is, you just want it there. These are the only values for the countdown. Labels, last price. Okay, took away the current price. These are the only important values. We have the all-time high, 17.2, 13.8, and 10,500. That's it. Those are the majors. So what actually we're going to do here, and this is we haven't been doing this, we're going to do this now going forward, because these are the major values we're looking at. We're going to make these just a little thicker, just so they stand out as we go through the other time frames. So there we are. Yearly, there's nothing to look at here, guys. We are above any candle close ever. This yearly candle looks amazing. It's a beautiful candle. There's really little to be taken here. This is going to be true if we zoom in as well for a little bit. Quarterly, higher than it's ever been. Higher than it's ever closed. We do have quite some time before this does close. So this is not counted as cooked yet. Where did my label go? Last value. The labels, wait. Uh-oh. I'm off my groove. We haven't been doing the warm-ups. Now I'm off my groove. Where the heck is symbol? Okay, symbol last price. Okay, and countdown to close. There we are. Still have 43 days in the year. 43 days in the quarterly. They close at the same time. That's plenty of time. Plenty of time to move this candle, and in fact, the probable assumption is that this candle will move. It will likely not close right here. So that 17.2 could be in play. we could still see a yearly close there. I will say this: if we do go and test the all-time high, 20K, we just say 20K because it's actually 19,891. 20K just makes it easier. If we do go and test that before the end of the year, I'm going to say our projection is off. I know it's a beautiful projection. I'd hate to lose it. It brought us this far, and to abandon it now, it feels bad. It is what it is. We're going to keep watching. Important notes, we'll go over this as always. 3-month, no bearish divergence. Nothing bearish on the 3-month. It's a beautiful setup. We have the highest RSI high at the highest point of the candles. No bearish divergence. Amazing. Not going to see much else here, so we move into the monthly. Here's where we start seeing some spice, guys. This is the chart. This is the chart that allows you to kind of dismiss a lot of the other data that we might be getting. Monthly chart is the most bullish thing I've ever seen in my life. We look at our indicators. MACD, we got this signal at the beginning of the month. We were waiting for the monthly to close for it to confirm, but we don't even need to wait for it. We peaked over. This is the 2019 high on our histogram. The minute we peaked over it, we were doing a TA warm up that morning, and I said, guys, this is really exciting, but like don't get too excited yet because we have to see this close this way. But seemingly since that day, and I would love to go back and figure out what date that was we saw this. Since that day, this has only been gaining speed, only been gaining strength. So it seems maybe my assumption was incorrect, in the sense that we have to see it close to confirm it. It seems to be confirming itself. Literally from that day, there's been nothing but green. RSI is telling us the same story. Same story. 2019 versus now, no bearish divergence. We're sitting pretty. Monthly time frame, no bearish divergence, and we're setting fresh highs. It just couldn't be better. It's just nothing better than this monthly. 12 days left, so we're about halfway through. Lots can change, but as this moment right now, looking beautiful. We caught the Ichimoku monthly twist at the close at the end of the last month, and that is a rare signal. You see that really, we only get it at very epic or very critical times. We got it on the March candle after it closed and moved up, and we got it in October. Before that, there's none on Coinbase. Coinbase has never seen this signal on the monthly before. Before this year, 2020. If we go to BLX or longer time frames, Bitstamp as well, we will catch these, but you'll see that they really happen at the similar times. You see them directly before historic bull runs, so it's a great thing to be seeing on the monthly. There isn't going to be much else here. We're at the top of the monthly band. We look back, bull market, typically that's where we want to stay. We're going to want to stay there, and we're just going to keep bouncing off the top, pushing up the Bollinger Band, and continuing to make progress to the upside. The monthly at this point, there's very little to look at, simply because it's only telling us one thing, and it's just telling us things look great. This is a very zoomed out view. The yearly, the quarterly, the monthly, these are huge, powerful time frames, and man, they are kicking ass. They are taking names right now. 3 week, no. We always look at one random time frame during these that we don't usually look at. Let's try to find one that's closing sooner rather than later. Okay, 2 week. We don't really usually look at 2 weeks. I don't know if we have at all, but it closes in 4 days. So let's use this as our improvisational time frame that we don't usually check out. Can't claim I've really ever looked at this, maybe. So I'm not sure what it's going to show us. But in the Tom Crown Trading Handbook, we say all time frames are valid, all time frames are important, and the only thing that determines whether it is more important or less important than any other time frame is how big it is. The 2 week, more important than the week, more important than the day, more important than the hour. This is still a pretty big one. Beautiful set of candles here. This is a beautiful set of candles. We have the bubbling pattern, I call it. You've heard me say before. That's why I refer to crypto three white soldiers as the bubbling. And what you see basically here is multiple candles in a row of the same color, but not just that. What we see is that each candle is larger than the previous, minus the week right now. This one, somehow I lost my ticker. Where is my ticker? It'll show me what our change values. There we go. Sweet. Okay. So we see in the top left, I don't know if you guys can see it that well, but this candle is 4.2%, 5%, 14%, 18%, and now we're at a 15% candle. I think if we do measure it from the very top, that it is likely above 18%. So that's 1, 2, 3, 4 candles in a row of increasing size, and potentially 5. That's what we want to see. That bubbling. I don't think there's a real word for this. We make up terminology all the time. Crypto is a new space. So this is the bubbling pattern, very bullish. And what we're looking for here really is, or the strength of this bubbling pattern is, as soon as we see a candle, so say this 2 week, so in 4 days, if we close and it's not above 18.69 as the previous candle was, we can start looking and saying, hey, this bubbling pattern is breaking, or we're losing momentum here. We're losing some of that strength. So it is a really good tool in crypto in that sense. Is you just need to, it's very simple. As long as each consecutive candle is the same, is a higher percent change, a larger candle, then you're still in trend. At the moment, a little bit smaller, but we have pulled back. Not too much to see there. But that's just a beautiful example, so I wanted to point that out. Let's see. Moving averages are unlikely to tell us anything, honestly, really on any time frame at this point. Price has escaped its averages in such a strong manner that all of these moving averages, because they are lagging indicators, they're all just trying to catch up. They're all going to be below. So the only real information that we can get from moving averages or from these lagging indicators really at this point is if and when we see weakness or reversal, we can look to those moving averages for areas of support, or areas that we may see a likely bounce, areas that are likely to catch maybe some of that selling pressure. But as of right now, being this far removed from the mean, they aren't going to be able to tell us anything. They're simply just too far away. So if right here, we have a whole bunch of them. We have the 100, 200, the 100, the 50, the 20, and you can see these things, these guys are so far back that they're not really relevant at the moment. If I can add the label values, there we are. We see the 100 is at 7,003, the 50 at 8.5, the 20 at 10.1. These are just so far underneath price that they're really not giving us any information at this point. And of course, this is the 2 week, so they're extra removed. Ichimoku Cloud is telling us nothing except we're above the trend. Cool. We're above the TK, the quick responding line. And as long as we remain above the TK, this green line here on Ichimoku, quite hard to see, following the 5 moving average really closely. As long as we remain above this, we are still in the same trend, despite the bubbling pattern that I was just talking about. But you'll see what happens. If we don't get a bigger candle here into the next candle, this TK will likely come to threaten price and may throw us off trend, but that's still far away. Not a lot of information. Technical analysis is an interesting beast. It's like having the biggest tool belt in the world, and it's not even knowing how to use the tool belt or how to use the tools you have as much. It's knowing when to use each different tool. That is a challenge. Let's go into the weekly. This is a real time frame. Man, we finally got this too. We have been waiting for this. So we looked at this on the monthly. That was a huge signal for us. And what was interesting is typically the monthly is going to be more lagging on indicators because it's such a long time frame. As we zoom in, we would expect the shorter time frames to reflect these signals from the longer time frames first, because they're faster. They respond faster to price changes. We're not seeing that. It's weirdly, we're seeing this in reverse. We have it on the monthly, And now finally, as we speculated, when we saw it on the monthly, the weekly is caught up. Beautiful. This is the first week that this is actually valid. We can see the current, this is the histogram on the MACD, the current weekly candle right here, new high, no bearish divergence. This is such an important sight. I think this might put it into perspective. So I'll put one more line here. That line is from the all-time high. That is 20,000. So the highest price has ever been. RSI is up here. The second highest, let's say, so it's 2019 high. And then we have today. So what's this? This is saying that we don't have bearish divergence from last year's high, and that we really kind of have a clear runway. We have a clear runway to come back and test a higher MACD high in comparison to 2017. That's going to be really hard to do. And likely that's when we do in fact see that, that's going to be full swing bull run. At that point, no one in the world will doubt Bitcoin is bullish. Right here again, 2019 high for a long time, since early September actually, or late September. We have had a threat of bearish divergence, and people have been paying attention to this. Likely we can attribute some of the bearishness that we've felt in the space to it, because the weekly was just down here and price was moving up so fast. We weren't seeing higher highs and blah, blah, blah. And many people were probably looking to that 2019 high and saying, we have bearish divergence, oh no. And they were right. However, you were here, you know, we were sitting here and we've been brainstorming this and saying, man, we see the monthly isn't showing this. The weekly is. It's very likely that the weekly is going to push up to make that newer high, make that higher high, and to invalidate that weekly bearish divergence. We got it. Bam. Really, Bitcoin has been following this path that the monthly has set. It's very strange that the monthly did it first, but everything else is catching up now. It's looking good. No bearish divergence on the monthly, no bearish divergence on the 2-week or the weekly here. Again, the weekly is going to be the same as our moving averages are so slow to react to price that they're really not showing us anything. They're not showing us much. The only important value we're really watching here, and we've been watching this like a hawk. We're going to keep watching it like a hawk. You guys are probably sick of hearing about it. I don't care. You're going to keep hearing about it. The weekly Bollinger Band. This has been our guide. This is what tipped us off. Early August. This is what tipped us off. We caught the bounce off of the middle Bollinger Band on the weekly. And we've done this many times. We're not going to go super in depth to it, because we can trace this back and look at almost every single bull run, and we see that that weekly middle Bollinger Band is the defining moving average for the trend. Price ranges above it, sells off to it, bounces, creates a higher high, usually trades sideways a little bit, falls back to it, and just that's its bullish pattern. We want to see tests to it on the way up. We want to be above it. You can see almost any amount of time, almost any time it's ever hit us as resistance instead of support, we are in a bear market all throughout 2018. Smashing price down. And we have our rally. I always love to go over this quick. 2019, we're missing the tests. We didn't once come back to the 20. We didn't once come back to the weekly middle Bollinger Band. And so far, that's our example of maybe what a bull run that isn't sustainable looks like. Didn't come back to test it. Traded sideways, fell through, and now you're back into bearish territory. So far, so good. We've tested it 3 times on the weekly, held as support, and just look. It literally, since we caught that, and this was a Patron post, some of you guys were probably around for that, we were looking to go long at 9,835. I think price went to like 9,815. We're off by 20 bucks. And since then, there's been no lower low. Middle Bollinger Band right now. So this line, I'll make it thicker for the newer people joining us. They know what we're talking about. Right here, it's currently at 12,000. This is picking up speed incredibly quickly. It was moving very, very slowly up all through September and late August. And now that we're seeing this price action, it is really picking up steam. In fact, it is at the highest value it's ever been at. If you look back to 2018, when trading at $20,000, we can see that the middle band here only went as high as 11,269. This is the height. It might be easier if I hide the candles. If you look to the left, you can see currently that moving average is even higher. This suggests that though we are lower in price, the average price right now is still in a stronger spot than it was all the way back in 2017 at its peak. It's very exciting stuff. And we can see this all over the place, everywhere. We're seeing significant high time frame moving averages setting new all-time highs. It is mind-blowing. It is awesome. However, all this bullish talk, I love it. But we can't forget, we can't lose sight of this 20 moving average. You can use the Bollinger Band indicator. The default is the 20. So you can just use that, or you can just put the 20 moving average on your weekly chart. Doesn't matter. We can't forget about it. No matter how bullish we get, we can't forget about it. Always, every TA warm up, we're going to look at this. It's currently at 12,000. It's a large increase since the previous weekly candle. Moved up almost $500 in 1 week. So if we just kind of eyeball it and we say maybe it's going to move up about that similar amount, though prices are still kind of accelerating, so maybe it'll even start picking up more. We do like to do stuff like this. This is not recommended TA. This is Tom Crown original weirdness, but I do like to sometimes do this in the right scenario. We're just like kind of estimating this. This almost certainly won't be exactly what it looks like, but the timing is really interesting here. So you see the if the 20 takes the exact same course it's on right now, it will intersect with our 13,863 very, very close within the last week or so of this year. Very spicy. Very, very spicy. Because if you guys remember, we're looking for a test of this level if we're following the projection. We're looking for a test of that 13.8 in the first quarter of next year. Though we might be moving away from that projection, it's still in play. But it's very interesting that it appears as if the 20 moving average will be right at that value right into the new year. Speculating here, say we do kind of break this projection and maybe we move up to the all-time high this year. I still don't think this is the probable move yet, but it could. Maybe we get a back test of that 13.8 before the year's even over. That would be really crazy. That'd be a very that'd be a very volatile event. Why are you not showing me percents here? What is going on? Okay, what? It'll show me, it's supposed to give me this data, and then when I try to do it to the downside, it won't. That's really dumb. It's never done that before. Okay, I'm really confused. Don't make me do this in my head. That's trolly. Okay, so what it is 20,000 to, let's just do it to 30% retrace. Close enough. It's actually a little bit more. That fits what we've seen in previous bull runs. This is going to be interesting, guys. We're going to keep watching the 20, but specifically watch the 20 for when it crosses this important value here at 13.8. We've been looking for a back test, and that might be the time where it decides to do it. Of course, it doesn't guarantee it, but it's more likely than just any random given time. All right, let's move on. MACD, awesome. RSI, awesome on the weekly. Bollinger Bands, looking great. We're just pushing them up. Trend is up. It's okay to be at the top of the bands. Really, if anything, it's looking more bullish than we thought, and that's a strange thing to say. Very strange thing for me to say. All right, on to the daily. Now we can actually start seeing some of these moving averages in play. Some of them. The 50 daily moving up to our support does kind of appear as if the 5 and the 10 are leading price. We see that the 10, the daily has not closed below the 10 moving average. Oh, since October. That may be a nice little guide for us. 10 moving average on the daily. It's currently sitting at 16.3 and change. Spicy. What I really like here is, so I was hoping or waiting to get back to these levels where we can see small moves. We blew through 17.2. Didn't expect that. But what we do see is in today's daily candle already, it looks like we've already back tested it. Pretty interesting. Not only back tested it, but now we're green again. Now we're back in the green. So this could be, this is odd. If you watched the episode yesterday, I was kind of speculating here because, you know, TA is always about probabilities. It's never about knowing. And this bamboozled me. We didn't get the resistance, but we do see that it may be support now, which is, I'm not sure what to say. It can work that way again, you know, obviously, but it's odd that it didn't act as resistance and now it's acting as support potentially. We need to see this daily close, and then really we'd want to see another daily close where it's not invalidated. But that's not a bad sign. If we're not going to see it as resistance on the way up, it's an important level. Good to see it as support. RSI on the daily, still funky. Still funky. What we have is a bearish divergence, though it's not confirmed. We don't see the RSI actually pulling back yet. So it's not confirmed, but it is a threat. It is potential in the local highs here. Or I'm sorry, we don't see it in the local highs here because we have a higher RSI high, but the threat is back here. This is what, still warming up. This is why we call them TA warm-ups. On the 5th and 6th of November, this is the threat. Just to clarify again, locally, we do not have bearish divergence. That is excellent. You guys know my personal motto is the local divergence is always the most important, or the most threatening, the most powerful. So we don't locally, awesome. But we do when we look back to the 5th. The 5th of November is the highest our oscillators or our RSI has swung, and we have not yet gotten back to that point. It is okay for now because we don't see that the RSI actually has moved back. We don't see something like this. We see that it's a little flappy. It's gone a little diagonal, but this is still in flux as the day fluctuates in price. This little flappiness will move up and down. It may at some point look like it's moving down, or it may look like it's moving up. So we don't have any confirmed reversal on our side there yet, but it is something we need to pay attention to. We have another goal. We're always looking at where's the highest point in our indicator, and if we're at a new higher price, we have to keep watching to see if we do, or when we do, set a new high. So now the daily is looking to break 84.22. We already have a higher price, so without a break of this level, we're just going to inevitably be painting bearish divergence. We don't like that because that may end our rally. Looking at MACD, I don't even know what to say. We've been watching this for a long time. I don't even know what to say about this MACD. We have lower highs on it, which typically is not a great sign because we have higher highs in prices. But what we don't see is any flip to the sell side. It's monstrous. You don't really see this often. You see more commonly that if let's zoom out here, you see it's really a series of positive, negative, flipping back and forth over and over again. Rarely, and I don't see any local examples in the last few years, do you see something like this. So I'm not really sure what to say about this. Maybe it's just monstrously bullish. There just doesn't seem to be any selling momentum whatsoever since, this is what I'll say. There's just no selling. I've been saying it almost every day in the live streams. There's just no sellers. We saw selling peak at the 6th of September, and then we really haven't seen it return. Yes, if you want to nitpick, we can say, well, what about this little red candle? Okay, yes, you're correct. We have this little red candle. That just shows no strength. There's no selling strength yet. The last 3 days, as we put in higher highs in price, we see the MACDs again showing us growing momentum. We're going to keep an eye on this daily, and we're going to look for these things, these little periods where we see the momentum is waning on the daily, these darker blue candles, but we don't have it yet. So far, this is just still, I guess, extremely bullish. It's hard to interpret this because we have no swings. It's just staying positive. It's just staying in bullish momentum. It's very interesting. This is unusual. So as we were doing even back here and back here, we're just waiting to see a loss of momentum so that we can adjust what we're looking at or start looking at different things. But so far, all we see is momentum is continuing to grow on the daily. It's wonderful. Let's look at have here the TK. This has been our guide on the daily. You guys know I'm a big Ichimoku Cloud fan. I would love for you guys to understand Ichimoku Cloud, but it's not necessary. You really don't need to know much about it. It's very visual. There's 3 components. There's the cloud, which is this area. These are the clouds, this red and green clouds. I don't know how else to describe them. They just look like clouds. It doesn't matter what color they are. And essentially when you're above the clouds, it's considered the trend is bullish, and when you're below the cloud, trend is considered bearish. We actually caught the reversal here. We were expecting it to be on the 7th. We got it on the 8th. That was an incredible call made by Ichimoku Cloud and by our channel. Days in advance. We were 1 day off. But since then, we're watching, and you know what I should even just do? I should just get rid of the other one. There we go. Now it's a simpler indicator. This green line, this is the TK. That's just what we're referred to as. Since we've left the resistance of the cloud, since the winds have changed, as they would say, the TK has guided price on the daily. We see that there are no candle closes below it. We see wicking 1, 2, 3, 4, 5, 6 candles are wicking off of it. But this has been our guide. Currently, that is sitting at 16,789. I forget what we just looked at, but something else was giving us this exact value. I can't remember off the top of my head. I'm going to place a box here, and this is going to, you guys see me do this a lot. This is just going to help us remember, even if we don't really remember why it's there. As we flip through time frames, we're going to have it there and say, oh yeah, man, something from the longer time frames was suggesting something there. The daily maybe look to see support there, something like that. As this daily closes, as the dailies continue to set higher highs, we will see this TK continue to move up. If we don't set any higher high, so tomorrow, say we close here, and then tomorrow we don't have a higher high or a lower low, and the next day what we'll see is this TK will move flat and to the right, and that'll create that support we're looking for. Essentially what this box is doing is charting out what the future may look like in the scenario that we trade sideways. Likely to find support there. So we added our box. Bollinger Band at the top. This is going to be true of almost everything. The MACD and RSI. Yep. Okay. So RSI is kind of is not quite where it needs to be, but we've seen this play out on many time frames now. We see that the weekly isn't reflecting bearish divergence. Neither is the monthly. The daily has a thread of it, but we've had many time frames in this situation, and we've really pumped out of them. So we're going to watch the RSI on the daily, and we're going to watch the MACD on the daily, because we're watching for loss of momentum, which we don't have yet. That's pretty much it. So everything's sitting rather pretty. This is some funky 12-hour. So the 12-hour is the funkiest time frame, you guys. I know I won't shut up about the 12-hour, but it's been the funkiest time frame. For one reason, mostly. RSI on 12-hour has been the strangest is doing the strangest thing that it can do. It is giving us very weird signals. So it's been giving us bearish divergence since mid to late October. Yet we've been setting higher highs in price. We haven't set any higher highs in RSI. That's typically very bearish, or would be viewed as bearish because it's bearish divergence. You're losing highs in RSI, you're gaining highs in price. We haven't seen it reflect in the market. Doesn't seem like the market cares at all right now. This is why I think it's so funky. But what we do see, and this has kind of been my counter argument because trying to explain why it might not matter. Though we do see bearish divergence, what we see is kind of a flagging pattern. The highs are coming down and the lows are coming up. And what's comforting here is that we're above 50 RSI, so at least we're in bullish territory with this. If we saw this flagging kind of weirdness happen below 50, could be extremely bearish. So what we're looking for again, which is strange, because we keep saying this and this keeps happening, where we're saying, man, the RSI is saying this, we have bearish divergence. But what we're kind of seeing, and when we put this all together and look at it as one picture, is that really we're just looking for another pump to another high that's going to bring us this higher high on our indicator. And it's funny because we keep saying this and then it keeps happening. We've been saying this for like many different highs now. And 12 hours still hasn't invalidated it. It's so weird, man. I don't know. I don't even know. We've gotten many higher highs with this, and we've kind of like been expecting it. But I keep expecting RSI here to really push up and set a new high. Hasn't happened. So 12-hour, whenever this resolves, meaning we have a sell-off and then that bearish divergence plays out, or we have another pump and we go above 85.3 on the RSI for the 12-hour and we invalidate it, that would have to be an insane pump. I might even be able to speculate right now that whenever this happens, whenever we have an RSI higher than 85.3 on the 12-hour, will be when we break 20K. At this point, we have no more targets. We've been looking at this bearish divergence since back here. Literally. We've been looking at it since like late October at 13, 14K. And at that point, I was saying, guys, this kind of in my macro picture suggests that we are going to hit that 17.2. And the reason being is that 17.2 will invalidate this. It'll make it bullish again. No, I was wrong. I was wrong in the sense that while we did pump to that level, it didn't invalidate the bearish divergence. So we still didn't get the result that we're expecting. So maybe translating out again to say that maybe it'll happen at 20,000. It's very strange. I'm not sure. I don't really have the answer here. So far, what we've been observing and kind of discussing as ideas about it has been working and has been playing out. So I guess we're just going to stick with that. MACD. Locally, we do not have bearish divergence on the highs, but, and as I said, I always say locally is the most powerful or the most important. But when we look back to the early November till now, we do. We have a lower high, though we have a higher high in price. So the immediate threat, the stronger threat is not there. But the threat from the 6th still is. However, we have not lost momentum on the 12-hour yet. We don't see the candles. We don't see the histogram looking to flip bearish like we did back here where it turned dark blue, flipped to bearish. We don't see signs of that quite yet. And what we do have locally, and this is maybe its saving grace here because we don't have bearish divergence locally, but we do have bullish divergence locally. We see a lower swing low on our MACD with a higher swing low in price. So locally bullish divergence on the lows, no bearish divergence on the highs, but then when we're looking back, we still have that threat. So it's, I guess, another one of those things that we are keeping an eye on. This is a lot of TA, is identifying where our eyes should be, because there are infinite possibilities where our eyes could be looking. And by cutting them down and identifying what's important, we can do a better job. So they're a little more visible. extended. Crap. Yeah, the 12 hours funky, guys. It's just funky. It's just, I think it's really just waiting for a big move. Maybe that big move is a pullback. Maybe that big move is to break 20K. I don't know. We don't know. But we will keep looking at the 12 hour, and just like the daily, we're looking to see one of those darker blue candles. We're looking to see a loss of momentum. We don't have it yet. Locally, we have bullish divergence on our lows. Locally, we don't have bearish divergence on our highs, but we have some historical threats behind us that are still nagging us, saying, you got to pick it up. You got to keep going. If you don't keep going, you're going to lose it. You're going to drop your trend. The 12 hour is probably the most contested, in my opinion, right now. Moving average is not going to tell us anything really. Still, we're really stuck in that position of prices just moving away from them so quickly that moving averages aren't going to really be useful to us until we see a reversal or until we see a pullback. And when we do, they'll become very useful. The reason for that is we may not really have a visible support or something, but if we see a reversal here today, we might look to the 50, which is about 15,000. We might look to the 50 and say, okay, the 50 may offer support there. We may look to the 100 and say 13.1, which is the 50 on the daily. So while you're moving so far away from moving averages, in my opinion, and you guys know if you've watched me for years, they're one of my favorite trading tools. But they, just like every other tool, have a time. They have a time where they're useful and a time where they're not. And right now, not very. Excellent. So the TK on the 12 hour also been useful. Not quite as accurate as the daily, but it's been very useful as well. And we see that it's flattening. As I said, we have not created a new high, a new higher high in this 12 hour current candle. And that is why we're seeing the TK flatten out here. And so what this is suggesting to me is we're starting to develop our range. We always try to look for a range or a target in these warm-ups, and actually usually on the stream too. That's suggesting to me that we may have a range because it's just ever so slightly above the daily one. For my support anyway. We'll skip it for now. 12 hour conflicting. Not there was a lot to say about it, but not too much to say about it outside of that, because it is conflicting. This is the exact same setup as the 12 hour. Of course it is. Of course it is. So MACD, same exact, you can literally just repeat what I said about the 12 hour. MACD, we don't have locally anything bearish. We have a higher high in price. We have a in my brush. We have a higher high in price, obviously, because it's the highest price we've traded at versus the previous, and we have a higher move in the momentum to the upside on MACD, not bearish divergence. This is actually triply so because we have 1, 2, 3 higher highs, no divergence there. But then we have that exact same point that's still threatening. Locally, we have the same bullish divergence on the lows. It's the exact same thing as a 12 hour. And that's not very helpful. Conflicted. Essentially, the local, aka as I call the stronger, the more significant divergences aren't showing us anything. And the longer is just reflecting exactly the same as the 12 hour. So here's a little saving grace here. This is a saving grace for now on RSI, and I noticed this earlier. 4 hour RSI has been equally as funky as 12. However, there's a little more hope here, which is good, but also I guess to be expected, because we always do want to see shorter time frames creating movements that play out on longer time frames. And since we're kind of looking for this on the 12 hour and on the daily as well, it's good to see at least the 4 hour begin this journey. And what we're seeing is, again, obviously this we have this higher swing high back here that's threatening, but at least locally now we have put in a higher RSI high on the 4 hour. It seemed almost incapable of doing that since late October. Still is it's still being threatened, but it is also in much better shape than it was. It is not a hugely, it's not like the most massive higher high, or it might even be looked over or skipped by some people that aren't paying attention, but it is in fact a higher high. Bam, that is excellent. And clearly it is a higher high from the local, or the most local, RSI high. So things are looking good there, at least in the short term. Wonderful. We're still looking. This is what everything is suggesting, is we're still looking for one big move that hasn't come yet. Whether that's a massive move to the upside that breaks 20,000, or it's a strong pullback that creates very strong bullish divergence on the low, we don't know. But we're waiting for a big move, because we need to, on now 4-hour, 12-hour, and daily, set a new RSI high. Seeing a little more hope on the 4-hour than we are on the 12-hour, but it's all suggesting there's something big that is looming somewhere. I don't know. It could fall in line really well with our projection. That's my bias, I guess, but that's also what I think is just the most probable. There we go. Nice. Ichimoku Cloud. If you guys are noticing, Ichimoku Cloud is not super useful right now either. Really all it's providing us is kind of like a baseline for our trend to say, here's a line, stay above it. Stay above it, and nothing's changed. And once you're not above it, then start looking for the change. MACD, yeah, like I said, still equally confusing. RSI equally confusing. It's a spicy scenario. Is this locally? I thought it was. I thought locally these lows. Nope. Yeah, there's no comment there. 4-hour perfect, 4-hour middle Bollinger Banner, 20 moving average. Looks like it's right in between our two designated prices so far. Awesome. We're starting to see a lot line up there. Part of me wants to just make this one big box, but I don't like, like I can make, I could just draw a box from here to 0, and it's like, oh, my box hit. I like to make them as accurate or precise as possible, but a lot of stuff now we're starting to see is lining up there. So that's likely going to be our little discovery for the day. Just underneath our 17.2 as well. Not really much to. Let's zoom in into the hour. All right, let's get into like the fancy, fast, short-term TA here. Down into the hourly. Hourly looking great. Oh yeah, looking okay. Much better. That's funky. Get rid of all this. This same point, man. This same point is such a problem on all the charts. That's okay. Now we're like, so on our major lows, we don't have any divergence at all. That's not a bad thing. No divergence is better than bad divergence. Better than the one you don't want. We see our major lows on the hourly are coming up with price. That's fine. Let's see our major highs. Again, as we've seen on so many time frames, November 6th is just problematic with how high it was pushed up the indicators, and you can see that we've, on the hourly even, failed to set a higher high. Something tells me they're all going to resolve at once. It's all going to resolve in one move that probably stems from the hourly, then goes to the 4, then to the 12, then to the daily. Likely to be a quick move. Something just. So here, this is strange stuff. We have what is pretty weak bearish divergence on our highs here. It's like a triple top on our side, not super common. but it is not a strong bearish divergence. So we do have higher highs in price, and we don't have higher highs in RSI, so that's bearish, yes. But the fact that the market didn't have to overheat itself, I guess, is the logical kind of way to put it. This is a weak bearish divergence. RSI hit the same level 3 times and rejected. Really, the market didn't do anything with it. To me, this shows very weak selling pressure, very little, I guess, desire from the market to sell, at least at this moment. What we do see is, for sure, we have some bullish divergence here, which is nice on our lows. Absolutely, we do. I'm going to make these yellow. We see a higher low in price. And what really drives this home for me is the fact that we didn't really see any action at 17.2. And then we rallied up and we had this spooky candle. And then we came back. It looks like we tested 17.2. The number's like, yeah, 17.178 as support. See lots of buying action off of it. And we see price kind of weakly bounce up, move back to it, and then lots of buying action again, wicking off of it. I'm still confused why we didn't see resistance there, but seeing it as support, I mean, I can't complain about that. That's probably even better. But so we do have this bullish divergence on these lows. We see it on RSI. We have a lower low on RSI. And we have a lower low on MACD. So MACD and RSI are in agreement here on this hourly of this bullish divergence. That suggests that price may be looking to move up again. Surprise, surprise. It's unheard of in what's going on. And we had seen this. We did not, I think I was sleeping. I didn't catch this. I think because I was sleeping at the time, or just exhausted from yesterday's 8 hours of streaming. Ow. Oh, sitting weird. Sorry, bunch of pain in my knee out of nowhere. We do see bearish divergence on this high, this 18.5 touch. We see it on MACD. MACD failed to set a higher high on the histogram, and we see it on RSI. It was a double top. We don't have any divergence here after the initial bearish divergence on the hourly high here. We don't have any here on RSI or MACD. We have these tiny little flips, tiny little moves down. So no issues with our new highs, and we have clear bullish divergence on our lows. Our indicators are both agreeing. That's pretty nice. This gives the short-term outlook a bullish edge. Yeah, 1 hour 50. Dude, the 51 hour has really been a champ here on these moves. Price just keeps moving away from him. It's amazing. I'm going to connect these lows. See if we have a little trend line. So we can start examining just this local price action, because we really don't. We have bullish divergence, but man, I don't really have a target for it. We hit all the ones. So I guess what, 18.761. We'll pull that chart up in 2 seconds from yesterday. Let's connect the highs as well. Doesn't this price action look really familiar though, guys? If I get rid of all this, doesn't this look really familiar? Like, this is what we just have seen over and over and over again. It's just like visually slightly different, but it's still the same thing. We've been seeing this all year. It's like a flag. The flag moves up, we flag out again, and then we have this higher high in the middle of a formation that immediately has a bearish engulfing candle. And then it moves back to pretty much what is the median. We were talking about it as a diamond a lot earlier in the year. It's classified, I would say, identified by that higher high in the middle of a formation, and the highest point of it always has this bearish engulfing candle after. We see it on like every time frame. It's spooky. It's not bad, but it's just like everywhere. And what I really see, while this is, I guess you guys might not be able to see it in this sense, this price action looks a ton like this as well. The only difference is this should have been the higher high here, and then it would look like identical, in my opinion. We have the low, and then we have a higher low, and we just kind of float up. We have this here. It's much smaller. This might look more like that on a smaller time frame if it had that higher high in the middle. But we have a sell off and then a higher low. So maybe we get another higher low and we doodle along. All this price action recently has looked so freaking similar to me. It's creepy. I didn't even feel like going back and pointing it out. It's really like almost a fractal from this. It's like this is what I was saying. We keep seeing this from. This is all the way back in June. This. It's like that move up and then the bearish engulfing candle, and then like the highest high in the middle and bearish engulfing. It's playing out a little differently each time, but it's just such a familiar price move to me at this point that I guess I'm seeing it everywhere. We have the highs coming down, the lows coming up. Okay. Probably have the middle of our trading range will be right here. Yep. Ish. Maybe we can do a little funky, unorthodox TA here. A little unorthodox. There we go. Let's see how that plays out. All right. Okay, so bullish divergence. So, okay, so we have this bullish divergence. MACD hasn't confirmed it yet because, again, just like on the buy side, we also are looking for this on the sell side here on the 1 hour. We don't see the momentum waning yet. But we have pretty strong confidence. Oh, wait. Yep, we have pretty strong confidence that we will. If you look at these two most recent candles, they're very close together. It does feel as if the momentum here has lost some of its power. Trading right in the middle of the range. And where would we even go? Last night people were asking for targets, I think, during the stream, and I just put these ones up. Looks like we hit all of them except for 18,761. These are just fib extensions. They weren't real targets, but it's amazing how they played really well. We can do this again to try to put targets upwards, but kind of meaningless. Just like saying anything above us is the target, which is a stupid statement. Let's see. All right, I do like this though. Wow, I really like this. So the measured move here is the all-time high. That's pretty cool. Wow. The 2 fib extension is literally the all-time high from, get rid of this. Measured moves. We take the swing high and the swing low. When we break it, that 18,488, our measured move, our 2 fib extension, is right at the all-time high. That's ridiculous. That's ridiculous. Yeah, it's ridiculous. Cool. So I have no further targets then. Here's my statement from this. I have no further targets upwards, though I think this isn't news to you guys. I have no further targets upwards other than the all-time high. Our measured move literally right here is the all-time high. Yeah. Game, set, match. I don't know. Doesn't necessarily mean that's what we're doing first, but it's just very spicy to see that. I didn't expect that. That's using the magnet tool. Those are the exact numbers. I don't just kind of eye place trend lines like a lot of people. I use that magnet tool, which snaps it to the exact value. And that says all-time high. Cool. So, man, so what conclusions can we draw? This is such a hard time to do TA just because it's like you don't want to inspire rampant hopium and have people make bad moves because you're excited or because, like, you said the words. But at the same time, we don't really have much else to go. Like, there's really not a lot. So it looks like we may have an area of support beneath us from the daily and 12-hour that ranges from 7, well, let's just say from 7-1 to 6-7. We established this supportish range. We have bull divergence locally. We do have that on almost every time frame. A looming bearish divergence on our highs, but the highest or even higher time frames don't reflect it. So in the event we break up today, we get above 18,488. The only other number above us is the all-time high. I mean, that's it. If we break down out of this wedge, we may see support found at this 1787 area, 16775 area from the daily and 12-hour. And then, dude, there's really nothing. There's just nothing. We have 1386 below us. We have, we can take these previous highs, these previous kind of local highs that we had and say, oh, those could be support. 16K, okay. 16.5. See, these just like aren't really, it's just like, come on, of course these are the numbers. No, I didn't see the swing highs right. This is in our box already, so nothing new. Make this a little darker. Cool. There's our setup, man. That's what we got. Mind you, these little supports we have here, like 16.5, 16, 16.5, 16,000 and 16.5, these are not super mega supports or anything. But they are potentially support if we see a weaker sell-off or retrace. But it's kind of just we're kind of just in a void. We have kind of a big void below us. We have the biggest void in history above us. And it would not surprise me to see price just kind of range in between here for a while. That would actually be ideal, in my opinion. It would be ideal to see the rest of this year just trade sideways. Do accumulation into the new year, cool off a lot of oscillators and things, and then make a violent move, because all of the chart is suggesting there's a violent move coming. Violent meaning a strong move, not necessarily bad or good. So there it is. There's our breakdown. Not even going to go into the lower time frames, because if we go into the 15-minute, all we see really is that we have that hourly bullish divergence is just reflected, and that's it. So awesome, dudes. We have had, wow, this is the most people we've had here today. Pretty freaking sweet. Big old turnout. I'm going to upload this to, oh, this is an hour.